Fed Chair says expect pain and rare earth miner Linus shines. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is in. How you doing, Paul?
Good morning, Michael. Very well, thank you.
And our guest is well-timed. It's John Cash, 30-year veteran of the uranium sector and CEO of Energy. John, welcome to Kitco.
Hey, thank you. I appreciate being on the show.
Fill us in, John. I know that there's two ways of saying it, Energy or you are energy, but what are you focused on there in Wyoming?
Yeah, so we are nearly exclusively a uranium mining company. We've got a flagship property called Lost Creek. It's been in production now for over 9 years. We've produced nearly 3 million pounds of uranium in that time. And then we also have a second flagship property called Shirley Basin, also an in-situ uranium project in Wyoming. It's got all three of the major permits we need there to build it out and put it into production. So we are pretty much exclusively a uranium story. We have dabbled a little bit in gold simply because of an extensive database we have available to us, but really our lifeblood is uranium.
Let's turn to macro. Gold prices have fallen to session lows as Federal Reserve Chair Jerome Powell struck an expected hawkish tone in his much anticipated speech at Jackson Hole, Wyoming, where you're located there, John. In his speech, Powell reiterated that inflation remains the biggest threat to the economy, and the central bank is committed to bringing consumer prices back down to its target of 2%. Headline quote from Fed Chair Powell, quote, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring us some pain to households and businesses. These are unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. Without price stability, the economy does not work for anyone. As of this recording, spot gold was $17.35 and Bitcoin was $27.08. Copper saw a bit of a lift this week with hopes for China's stimulus as the country faces drought, geopolitical tensions, and housing and banking tremors. The metal is in the 360 range as of this podcast. And when I last checked, oil was in the low 90s. Paul, what's the mining headlines?
Before I do that, I just wanted to add, one can understand the efforts to contain inflation, but effectively that's piling more austerity on people that are already struggling with potentially lack of water, higher energy prices, declining wages. One does get a sense that this is just more grist to the mill, and at some point something on a big social level may have to give. Anyway, enough of my political rambling. The big news this week that was Rio Tinto clearly wants more copper and increased its offer to buy Turquoise Hill Resources to $40 Canadian per share a week after its $34 Canadian per share unsolicited offer was rejected. The new $3.1 billion US bid represents a 56% premium to Turquoise Hill's closing share price on the 11th of March, the day prior to Rio Tinto's initial proposal. Rio already owns 51% of Turquoise Hill, which holds a two-thirds share of the Oyu Tolgoi copper project in Mongolia, with the balance there held by the Mongolian government. Marathon Gold received a positive federal environmental assessment decision for its Valentine Gold project in Newfoundland and Labrador in Canada from the Minister of Environment and Climate Change, which has now been fully released from the environmental assessment process in both the provincial and federal levels, which allows the development to proceed subject to a few minor permits. The company can now get those last few licenses it needs to start building a mine, which it expects to produce about 180,000 ounces a year of gold over a 14-year mine life following an initial capital cost of around 450 million Canadian dollars. A couple of really big drill hits this week. First, Majestic Silver had a doozy of a hit at its Jarrett Canyon gold mine in Nevada, which confirmed the presence of high-grade pod of mineralization about 90 kilometers from the new connection drift between its SSX and Smith mines. Highlights there were 23.2 meters, grading 19.35 grams per ton gold. Snowline Gold up in the Yukon also reported one of the best drill hits of the month with 283 meters, grading 2.3 grams per ton gold in the valley zone of its Rogue project. This is a massive 651 gram meters. The stock rose 13% on the day to a 52-week high at a time when many other junior gold explorers were experiencing 52-week lows. Maritime Resources announced a feasibility study for the Hammerdown gold project in Newfoundland and Labrador, detailing an open pit mine with run-of-mine operations and ore sorting to provide 700 tons per day of feed at 6.76 grams per ton gold to its Nugget Pond mill facility. The idea there is to produce 50,000 ounces a year of gold at an all-in sustaining cost of less than $1,000 per ounce, following a $75 million initial capital investment. On a more geopolitical scale, German automakers Volkswagen and Mercedes signed agreements with the government of Canada to promote e-mobility and to explore opportunities across the automotive and battery supply chain. Canada is quickly becoming the green supplier of choice for major auto companies, including leading European manufacturers, as we transition to a cleaner, greener future, said Canada's Minister of Innovation, Science and Industry, Francois-Philippe Champagne. Meanwhile, south of the border, Antofagasta plc subsidiary Twin Metals Minnesota filed a lawsuit in the U.S. District Court in Washington to reclaim its federal mining leases for its Twin Metals copper nickel project and reverse a series of what it called, quote, arbitrary and capricious actions by federal agencies aimed at preventing the development of its modern mining project in northern Minnesota, unquote, which it claimed undercut America's long-term priorities of securing domestic supply chains, addressing climate change by moving towards a clean energy future.
We had some striking year ends from the Southern Hemisphere. Those were companies out of Africa and Australia that had both their year ends and had their half one year ends. I've never seen so much divergence between people doing well and people getting hit. Sibanye-Stillwater profits were halved at its year end. Oz Minerals, which is currently being courted, or as BHP is trying to acquire, they were down 60% for their profits. Some of the issues that both flagged were inflation. They had supply issues. They had labor strife, as well as they had soft commodity prices. On the flip side, you had rare earth Linus, which had a record full year profit at $500 million on the strength of high rare earth prices. And Goldfield reported an H1 net profit that rose 31% year on year to $500 million. That should certainly provide them with a lift in terms of them trying to acquire a Yamana. Apparently, it's been reported that the deal is gaining some momentum. John, I'd like to bring you back. Now, noting your PowerPoint and your investor slide that you have, there's been a number of good stories in the uranium market. And then going back a couple months, I think of the Sprott uranium crisis. There's been the news of China that's doing a massive build out. This week, we had news about Japan is looking at a restart. There was also earlier the Cameco restructuring. John, choose your favorite.
Oh, they're a good list to choose from. Seems like the wind is at our back right now in the nuclear space. So much good news. It seems like every week we're getting something very substantial. But I'll focus on Japan since it's the most recent news. Earlier in the week, Japan announced that they were going to be working on expediting the restart of a number of their reactors that were shut down post-Fukushima. In addition to that, they announced that they would like to begin construction again going forward with nuclear reactors. That's really a result of a number of factors. Number one, they need the energy, and they've relied very heavily on nuclear in the past, and they see that they need to get back there because energy costs are so high right now. Nuclear is really the only solution that they have. And the other thing that's really important worldwide, not just in Japan, is nuclear is carbon free. And so the world, not just Japan, but China, the US, Finland, India, the world is moving toward nuclear. And it's a big push. We're seeing it in Japan, China, everywhere around the world.
Paul. Thanks,
John. I want to ask you, one of the other news items this week that's kind of related was, Russian forces taking possession of the Zaporizhzhia nuclear plant in Ukraine and taking that off the grid. If in worst case scenario something happens there, to what extent would that shock impact this growing wave that uranium and nuclear power is experiencing? Would it produce, do you think, a similar response as what happened in 2011 after the Fukushima disaster? Or is the game changed now in terms of, the renewable energy, green energy as being such a driving force, plus also the threats to gas supply from Russia and Europe and all the rest of it, that, any accident that happens there could be sort of overcome?
Yeah, no accident is good. Obviously, But I think the world is beginning to recognize the value of nuclear. And if you take a look at extreme circumstances like a nuclear power plant in the midst of an ongoing war in an event happening there, I think it's a big deal. It certainly would be very difficult on the uranium producers and the stocks and the market caps. But I think there's a recognition that, hey, it's in the middle of a war, and there's going to be destruction and chaos ensues. And what's happening in Ukraine is horrific. It shouldn't be happening. And hopefully cooler minds will prevail, especially around a nuclear power plant. But it's hard to say exactly what the outcome of that's going to be or the consequences of it to the industry. But again, I really believe the world sees the value now of nuclear power. So hopefully we don't have any issues, but if there are, hopefully they are resolved quickly and the industry can continue on without being set back for a decade again.
Well, that does seem to be the sort of paradigm now. The world is rapidly moving out of a period of multi-decade period of cooperation and internationalization to being very much regional blocks again, in which mineral supply, security of mineral supply and security of energy supply principally are right at the top of the agenda.
Mm-hmm.
Absolutely. Sorry, go ahead, John.
No, I just was going to comment. Absolutely true. And the IAEA, they're trying to get into the power plant right now to be able to observe what's going on. The sides seem to be maybe coming together on that. So hopefully this gets resolved very quickly.
How has the production picture changed over the last decade, John? So I asked because we just had those terrible uranium prices in the 30s for the commodity. You had Cameco that was paring back production just because they didn't want to sell into the soft market. You've also had what has also been happening in Central Asia. They've been having difficulties there in terms of, at least private miners have had difficulty in terms of operating in that region. How would you say the supply picture has changed?
Yeah, it's in the uranium space, the contract cycles with utilities are quite long. So when events happen, sometimes production doesn't really keep pace with price because companies are filling into long-term contracts. So, 2007, 2008, some good times in the uranium space, some very good high prices as suppliers were catching up. Then Fukushima happened. That really drove prices down for a very long time. But it didn't necessarily drive supply down because so many producers had those long-term contracts, so they didn't shut down. But those have peeled off now. And with COVID and other issues globally, we've seen that supply now is not keeping up with demand. In fact, we're probably short around 30 million pounds per year. We need roughly 180 million pounds per year. That can't go on forever. And we've got other financial players jumping in and buying up anything that's not nailed down. I'm speaking specifically about Sprott. And so we're seeing a lot of pressure put on the market going forward.
John, you've sort of forecast my next question. I was going to ask you, the Sprott Physical Uranium Trust, or SPUT, that's just over a year old now. So I was going to ask you what impact, if any, that has had on the market and the pricing.
Yeah, no, it definitely has an impact. The uranium space, though, it has two essential markets. One is the spot, S-P-O-T market, not the Sprott market. But the spot market is where Sprott is playing. Those are the pounds that they're buying up. However, that only represents maybe 15 to 20% of total sales in our space. The remainder, it goes into long-term contracts. And those long-term contracts typically are 3 to 8 years. Typically with utility customers, very stable long-term agreements. So Sprott, they're buying up just anything that's not nailed down, anything that's mobile inventory they are trying to purchase. They've purchased greater than 50 million pounds now. They've been out of it for just a little bit because they're negative on NAV, but when they get positive again, that will put them in a position where they can use their ATM to raise money, and then they will take that money and purchase more pounds. So when they're on the market, they put a lot of pressure on the spot price. And we've seen that, price just a few months ago was pushing 65. Now we're down to about 48. That's largely reflective of Sprott not being in the market. But we do expect them ultimately to come back into it and put more pressure on.
Thank you.
John, is the U.S. a good place to work? Paul mentioned earlier what was happening with Antofagasta and them trying to advance something in Minnesota. There was also with the Hudbay Rosemont trilogy and also up in Alaska.
It is a good place to work. Not that we don't have any challenges. Certainly we do. I mean, there's a long list of mining companies that have had difficulty getting licenses and permits in the U.S. But you have to pick your neighborhood. You can't just go work anywhere. You have to have that social license. You have to be in an area without threatened and endangered species, areas without archaeological resources. But if you can tick those boxes, and if your deposits are in the right neighborhood, the U.S. is a great place to work. You do still have to be patient. NEPA and other state and federal actions, they do take time. You can't jump in and think, hey, I'm going to form a mining company and be in production in 3 or 4 years. That's simply not the way it works. It's going to take many, many years, 5 to 10 years, most likely, to be able to do that baseline data collection and work through NEPA and other federal and state processes. So no, it's completely doable in the U.S., but you have to pick the right neighborhood to work in.
Your Energy is in situ operation, correct, John?
We are.
What is the on a regulatory hoop basis? How does that compare to, say, if you're making an open pit mine?
So from a regulatory perspective, I would say there's not much difference, especially in the uranium space. You still have to go
even
through
with
the same
tailings, and
we don't have tailings.
Yeah.
So that makes it a little bit easier in that regard. The environmental impact from in situ is significantly less than from an open pit deposit and mine. But nonetheless, you still have to go through essentially the same regulatory process. So it doesn't really speed up things or make it much easier, despite the fact that in situ has a very good reputation of being very low impact. If I were to take you out to our operating Lost Creek mine today, and I would drive you through the active well field, you would say, this is not a mine. This is a water treatment facility. The mine is covered with grass and sagebrush. We have little wellheads sticking up on a 100-foot grid, and they look like little beehives. We've got antelope, sage grouse, elk out there grazing in the active mine. And when we get done with an in situ mine, you clean up the surface, you clean up the groundwater, and you get approval from the agencies, and it's free release. And you can't even tell we've ever been there, as opposed to an open pit where if you don't backfill the pit, you're left with a very large pit lake. So great technology, very doable in the U.S.
John, what's hardest right now? Is it inflation, government regulation, or just finding qualified people?
People. That's pretty easy to answer. We're looking at ramping up production, trying to get more contracts to be able to justify that ramp up of production. And the one thing that keeps me awake at night, and there are a lot of things I worry about, but the one thing that really bothers me is the ability to go out and get qualified people. We've been doing some hiring and we've been able to find people, but I would say our effort is 5 times what it has been in the past. We have to advertise more. We have to hit job fairs more. We just have to entice the people. We have to be more creative to go out and find people. And it can be done, but it is very challenging.
John, stories or people or organizations that you're paying attention to generally within uranium space. It's noted that you're a 30-year veteran. We do have the good news story for the uranium producers that we're seeing better pricing right now, and then we're just seeing that there's going to be a ramp up in production. But any particular areas or any particular companies that have been notable to you over the last couple of years?
I mean, sure. I mean, you've got the gorillas, Kazatomprom out of Kazakhstan and Cameco. Those are the big producers. Orano is in that category as well. They've been around for a very long time. So they bear watching, especially Kazatomprom. They're the largest producer in the world. But they're subject to some geopolitics right now. And I think that really needs to be watched very carefully. There's a tremendous Russian influence politically, but also in the mining sector in Kazakhstan. Uranium One is a Russian-owned company owned by the government, but they have several large mines in Kazakhstan. And so we start talking about sanctions of Russia. It's not just of Russia, but it could affect production from Russian companies around the world. And Kazatomprom, they are by far the largest miner in the world. So if we begin to see sanctions on Russian companies, not just on Russian soil, but around the world, that could have a dramatic impact on uranium supply. And we've also got a transportation issue out of Kazakhstan that we really need to watch. It's become very challenging to ship material through Russia, which is the preferred and historic route. But because of insurance issues, potentially sanctions issues, Kazakhstan is looking for alternate ways to get material out of the country. And if you take a look at the globe, take a look at the map, getting anything out of Kazakhstan, which is a landlocked nation, is really difficult. And finding that alternate route has proved to be very difficult. So that puts the supply of uranium from the biggest producer in some jeopardy. And we are hearing from utilities that they're concerned about that. And it's something that they're keeping a very close eye on. So we're watching that very carefully. It's impossible to know how that will develop going forward, but it could be big news going forward in our market.
I assume getting information from what is that company up to is just going to be difficult as well to government control in terms of regulations and disclosures.
Yeah, that's absolutely right. You know, Kazatomprom, which is the Kazakh state-owned company, they've come a long ways on public disclosure. However, Uranium One, we always question, is that really accurate, or are they just telling us what they want us to hear? So yeah, it is absolutely an issue, especially when dealing with Russia and a Russian-owned company.
Let's turn to our number of the week. Guest goes first. John, do you have a number for us?
Hey, easy, 1 million. 1 million because that's our licensed capacity at Shirley Basin. It's very close to our licensed capacity at the Lost Creek mine. And it's also the amount of toll processing we can do from a third-party contractor at our Lost Creek mine. So that takes us up to a total capacity of 3 million when you add each of the 1 million pounds up. So that's my number for the week.
Paul, what's your number?
My number's got a very esoteric connection to minerals, but it is there. 300,000 or 300,000 US dollars to be more precise. Apparently that's the cost now of raising a child in the US to adulthood. John, does that sound like is that expensive?
It sounds a little expensive, but I've got 3, so I can do the math and get back to you on that. But yeah, it's expensive, let me tell you, especially when it comes to college.
I assume, John, that's entirely why you moved to Wyoming, I guess, right? So,
hey, you know, absolutely. Lived in Nebraska before we moved here, and that's actually one of the things we considered. The income tax in Nebraska is quite high. Here in Wyoming, we don't have an income tax, and it was a meaningful amount of money difference between the two.
My number of the week is 2. This week, China announced it is using 2 large drones to seed water clouds above its drought-stricken Sichuan region. Sichuan is a major hydropower producer for the country. China is currently facing electricity cuts since water levels are low, which is having a major impact upon manufacturing and, of course, commodities. John, developments at your company over the next 12 months you want to highlight?
Yeah, you bet. A few catalysts that people should be watching when it comes to your energy. First of all, we've put a bid in with the Department of Energy to sell a portion of our inventories into the newly established uranium reserve. So we expect to hear back from the Department of Energy by the end of September with regard to whether or not we've prevailed on that. We've also signed up a contract for production from Lost Creek. We are looking to sign up additional contracts to justify the ramp up to full production. So those are a couple of catalysts that the viewers should be looking at with regard to your energy going forward.
That's it for us. You can follow me at Michael McCrae on Twitter. That's a McCrae with 2 C's. Paul is at Paul Harris Gold. John, how would you like people to get a hold of you?
Hey, they can go look at our website, ur-energy.com. My contact information is there, as well as a lot of good information on the company.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of John Cash, Paul Harris, and myself, have a pleasant weekend.